Hi, everyone. Good day. Everyone doing all right? How are you, Brock? Everyone else doing okay? For future reference, guys, we always start at the top of the hour. So next time you come into phase and you don't see anything happening before that, it's because we haven't started. Okay, so let's start off with US dollar yen. And just want to talk about the value of having a holistic view of the market. And that means understanding how everything affects each other. People call them correlations. And yeah, you can get killed trading a correlation that disconnects, but you know, there's a reason why we follow them. And sometimes the disconnect is actually the market message. So I'm going to use Blake Pipsar as the example. Okay, everyone with me now? Hello, Shahab. So Blake's been doing this, a few months, and he noticed on this breakout and what was happening with risk. So here's risk, right? That the yen really was kind of weak. Why weren't we already here? So he was watching it against risk and noticing that it was weak, like the weak sister, the relative weakness, which kind of tells you if it can't do well with the tailwind, which was risk on, and maybe yields were bottoming, what's going to happen with a headwind, like a correction in S&Ps, yields challenging recent lows, and then you tie that in with the technical. So what was the technical? He has different triangle lines, etc. I just went with something simple, like a horizontal line. If you look at this, look how many hits he had here at 70, here, here, you know. So you knew we were talking about it for a long time. You think they'll go for the buy stops? Okay. So they went for the buy stop. See, they even gave people one more day of hope before they just blasted through. So it could have been an important breakout, but market conditions were saying, God, major breakout out of I don't know how many months of consolidation. And a week later, you're here back testing it. And it looked like there was potential if some of the related markets started doing something else that we could have a failed breakout. Here it is, it's manifesting shorter term now. US dollar yen should have some trouble at the breakout breakdown. Starts closing back above it, something else is happening. But that's the advantage of having experience. And, maybe the dollar is the fulcrum of the wheel, but on every wheel, there are many spokes, right? And they all revolve around the fulcrum of the wheel, and they're all related. They're all on the same wheel. So how do you learn these things? You learn from over time, noticing them, just awareness. I'm sure there are books that talk about correlations. You could hang out in a community like this and hang out with pros in our chat room and talk to guys that have been successful bringing home the bacon, not from their website, but from their trading. Okay. So I just wanted to talk about you know, how experienced, and so you have a goal of learning how to see the markets. All right, so you have a whole view. I'm not saying you could know nothing. You can also not know anything about that and focus on one pair and be technical, and that'll work too. There are many ways to skin a cat, but knowing how all the pieces of the puzzle, as Ziggy would say, fit together, give you market messages and give you biases and have you paying attention to a particular instrument that is giving you that message. And that's what the yen has been doing. I mean, Blake rarely tweets a trade idea in my stream. So sometimes, and I know you all have felt it, and I'm not saying that there are times where you really have a high degree of conviction and it doesn't work. But after you've been doing it for a while, there are times that you really know. And I'm not saying you can't be surprised, but there are times when everything is lining up to set a trade up. You know, if you only waited for those kind of trades, you know, you would trade a lot less, and there's nothing wrong with it. So why don't you try that? Why don't you wait for everything to line up and start paying attention to, oh, the yen's down, what's happening to yields, and I'll wrap it with yields. But anyway, I thought that was a great example of Blake using correlation work and his knowledge about how currencies work against equities and yields. And here's your quick look at yields. One more thing before yields. This is a very important level in the silver here. See this? So I do think that if the yen keeps accelerating to the downside, there's still another pop left in silver. Gold looks a little better, maybe not today, but see, well above this high, while silver took it out, and it's sitting on this 200-day. And I want to wrap it with, of course, this. Yesterday I said short 33.33, 10 handle stop. It survived this pop. S&Ps could be getting ready to roll over, or maybe they'll make another drive. Actually, the 2-week off numbers all the way down here, 32.65, I believe. But here's your look at yields. Remember, I've been showing the TLT for a while. The compression of this formation sure looks like it's trying to come out of here, right? And then here's your 10-year, you know, hanging on by a thread, and actually the 30-year, look at that. Okay, so just looking at the fact that the 30-year is breaking down before the 10-year, because, you know, I know how markets relate to each other too. This is saying that the steepening in the yield curve that we got here is beginning to unwind and beginning to flatten again. And knowing that banks do better in a steepening environment tells me I won't own any bank shares with what's going on. Okay. And with that all being said, and our offer down to the finish line, and look at what it breaks down to. You know, the annual, $70 a month for everything, for the whole team, for the dashboard, for the chat room. Working with Amanda, with our traffic light page, with all the research, with the different disciplines and methodologies of Elliot, Grega Horvat, harmonics, Andre, basic technical, Blake and Steve for the candlesticks, and Stelios for the macro. You get active pattern and plays to give you some ideas and guidelines for entries and exits, and just all the time you would save if you went through all these instruments and started labeling support and resistance areas on all of these. Pretty time consuming, right? And don't forget, you get push alerts, so you don't have to be in front of your trade station for us to inform you of important market events. So I would recommend you invest in yourself. Look at it that way. And said, well, I'm paying for a subscription. Why don't you just call it an investment in you? And if you're fairly new, I'll tell you something. You're going to pay to learn one way or the other. Okay? There will be a tuition. And the first chapter of anyone's trading journey is learning to be a survivor. Steve Burns used that quote. You'll see it on Twitter. I didn't even know I said it, but I must have. I blab a lot. And I'm going to end my blabbing and get some updates from Blake Morrill and his looks, so he could go ahead and go.
Hey,
Hey,
Dale, how's it going?
How are you, buddy?
Good. There was just a report that the coronavirus is hitting. Just had its first case in Singapore. So, markets are getting a little jittery on that. I was joking yesterday about I get a case of the coronavirus probably every week because I like Corona, but it's the wrong Corona. And I joke about it, but it's one of those situations that the market really is just brushing it off. But if it's a SARS type of environment, it will have an impact on the markets a little bit. And obviously if it gets a little worse, we could have a more negative impact. One of the things that I think about, Dale, is that and this is, I know it sounds a little crazy, but as this world gets bigger and more mature, it seems like these viruses and they all seem to originate in Asia mostly, right?
Yeah. And also it's
they don't ever originate in like the Netherlands.
Yeah.
But
because of the high population and pollution and all of that.
Yeah, the temperature, probably more the tropical environment, more of a cesspool for, with the heat and the humidity and more of that type of fertile breeding ground for viruses, I guess. But the fact of the matter is that they seem to be getting worse and worse as time goes on. Maybe it's just me being older and being around longer that I'm feeling this way, but I don't know. I guess I didn't live through the Black Plague either, so
yeah. I read a climatologist's work I don't know, earlier in my career, and they were talking about the weather cycles before global warming became popular, and he was talking about that we're having more extremes, not just the heat part, but the cold part. And that's when viruses really can take hold with that type of climate as well. So they mutate. Also, our resistance living in this climate makes us more vulnerable as well.
Sure.
So it's just all part of this cycle. We're way overdue for a pandemic.
Well, let's hope we're not. Let's hope we're not.
Okay, you know me.
Let's hope Mother Nature is a little kinder to us in our lifetimes. But let's talk a little bit about the FX market. So the ECB rate decision.
But don't tell me this. I'm going to wrap it with this.
God.
Don't tell me that worrying doesn't work, because almost everything I worry about doesn't happen.
Well, here's the thing about being cautious. Cautious also in the markets is safe. So whenever you have doubts, whether it's about an environment or whatever, being contrarian in a sense, or just more cautious about the market, has always kept me safe. you know, but at the same time, it's not going to make you big money either when you're, you got to fight some of these trends, and, being able to, identify situations where it's kind of blown out of proportion is where a lot of the big money's made. But, in this case, because stocks are so elevated, because we're at levels where I think we are looking a lot like late 90s, early 2000s, the big Nasdaq explosion. It's very very nerve-wracking to get too bullish here, and you have to be defensive a little bit. So now that's not really going to affect the FX market so much as of right now, other than the yen, and we can talk about that in a little bit, which you mentioned a little earlier.
Yeah, great call, Blake.
Thanks. I'm still short half my dollar yen. I covered half of it at 96 or 66, excuse me, short from like average of 98. And I'm staying short. I'm
Yeah.
trying to stay short for a little while longer, but I'll talk about that here in a moment.
Yeah.
Let's talk about the euro. So the euro is consolidating in this head and shoulder pattern. It looks like we're developing the right shoulder. Everybody's looking at the same chart. That's probably the bigger problem with the bullish, or excuse me, bearish move here. Now, the ECB press conference is probably going to be the mover. By the ECB statement, it looks like it's a very similar transition that we've seen from Bernanke to Yellen. I think Mark Chandler this morning noted a very similar transition between Draghi and Lagarde to Bernanke and Yellen, and it seems that way, at least on the surface. However, once we get her press conference here in the next roughly 15 minutes, but going out for the next hour and a half, we're going to see if there's any material changes in her stance. The euro is consolidating. It's been a very slow market. As I had mentioned before, while we're above 110.60, I'm very reluctant to be bearish the euro. We get below 110.60, and that's going to be a little bit different story, as we're going to be breaching, this uptrend line that you see here. But it is a tight consolidation above 111. I think it's a little bit more bullish. Cable's developing a nice little bull flag pattern. So for those of you guys that are bearish the cable, just be a little careful. Be a little careful as we're approaching. We're closing in on the Brexit, upcoming here over the next week. So just be careful with the cable if you're trading it. The Aussie soared last night on a strong jobs report, really hit the Aussie New Zealand. I wanted to be bullish because of this inverted head and shoulder pattern that I think is developing. I actually had a bid. I canceled it already. I had a bid at 130, 103.50, and I was hoping that we'd get one last stab lower like this last night, and then I was going to take it long, but it went in the opposite direction, which is fine because it allowed for a pullback in the Euro Aussie, which I'm bullish, and I bought some. As I've been trading this big inverted head and shoulder pattern that you see here, this big consolidation. I'm buying dips, and I've been buying dips like literally the last 2 weeks. And so when it dipped back down to this trend line, I picked it up again, as I'm expecting the Euro Aussie to move higher, and obviously a little help from the ECB would be great. But while we're trading above 161, I plan on being on the bullish side of the Euro Aussie. That goes hand in hand with a little risk off too. So if we get some risk off, the Euro tends to outperform the Aussie, and so I don't mind being long down here, which I picked it up already this morning. If you were in the ForexAnalytix members chat room, where I'm at 3 hours before this webinar, you already knew that I picked this up this morning, down 10, 15 pips lower. So now let's talk a little bit about the dollar yen, because the dollar yen, yes, I am short. I was waiting for this breakdown in the dollar yen. Whoops, that's not the chart I wanted. Hold on. I'm waiting for this breakdown in the dollar yen, and as you guys know, we have a just lack of we had a lack of follow through to the upside. Bonds weren't moving weren't moving down as the market was expecting. You know, precious metals were strong, gold or stocks were strong, dollar yen was just not following suit. So it was only natural that we're going to break through the support. Now, what we do have here is we have a head and shoulder pattern, right? So the head and shoulder pattern looks like this: shoulder, head, shoulder, neckline, right? So that means you can just measure neckline being at 109.75 roughly. You know, it projects us down to 109.20. Now that's a 38% retracement, also probably a pretty key level support, because if you look at the daily chart, this is that trend line. So retesting the broken trend line to me makes a lot of sense, you know. So getting down to 109.40 to 109.20, that's probably where we're going to find some good support for the dollar yen. Now, do I think that the dollar yen bounces there? Yeah. Do I think it goes up from there and hits new highs? No. I actually think the dollar yen is on its way to, you know, sub 108. That's my personal feeling. Now, you might ask, well, Blake, why do you feel that way? Well, one of the reasons why I feel that way is because I do think the stock market is a little top heavy here. So if you look at like the 1 hour chart of the S&P, and again, if you guys here, let me just show you the benefits of ForexAnalytix. Okay, so here's just the basic technical analysis for the S&P 500. Here's your 1 hour chart. We were trading at 33.18, and the analysis was, while we stay below the trend line intraday and the 38% retracement at the 33.21 level, the risk remains for a move below 33.08 horizontal support. This could usher a move towards 3,300. You know, the S&P has gone from, you know, 33, you know, 18, we're 33.13 right now. It's already dropped 5 S&P handles, and a breakthrough this support here, you know, could take us back down to 133. I think this is going to be, you know, probably a pretty strong level support for at least intraday, you know, for those of you guys that are like, ooh, well, I'm looking to buy the S&P. Well, why don't you wait till we get down there? That probably makes a little bit more sense, you know, because this would be, if you extend this out, be 127% extension of this move, would be right here at 3,300. That's probably a better place to be on the long side if you are a bull. However, I do think that the S&P is making its way lower towards this upward trend line, which now comes in around, let's just call it 32.55, 32.60. I think that's where we're going near term. If that's where we're going near term, and let's say I'm right, argument's sake, let's just say, yeah, Blake, you're right, we're going down there. Okay, if we go down there, where does the dollar yen go? Well, my opinion would be the dollar yen is trading closer to 109 than where we're at right now. So that's why if you're trading the dollar yen and you're thinking, okay, you know, I see what Blake's talking about, and I think, you know, he's right. It's, you know, coming back down towards 109.20. Well, we might be down at 109.20, 109 or so before, you know, well, if the S&P does trade back down to those levels. So that's something that you got to think about. Now, if you really want to know if the S&P is going to buckle under some pressure here, if you really are like, you know, I'm so nervous about shorting the S&P, and I get it, because I am too. Even though I'm short, I'm like, you know, well, when am I really going to know that the S&P is coming under pressure? The first place that I'm going to look is going to be right here. The US dollar Mexican peso. If you see the US dollar Mexican peso start to rally above this level right here, roughly, and I'm just going to give you an approximation, 1874 to 1876, 77, somewhere through this blue area. If you see the dollar yen running through, or dollar yen, excuse me, if you see the dollar Mexican peso running through this resistance, I would be pretty confident at that point in time that the S&P is about ready to sell off. Now, I do think that the risk for the US dollar Mexican peso, and let me pull this up on a clean chart really quick. I'm just going to pull up a different different data feed here that I can just clean everything up. Okay. So what I think for the US dollar Mexican peso, let's zoom. Oops, that's not what I want to do. Zoom out a little bit here. Okay, there we go. What I'm thinking for the Mexican peso is that we close the week below key support. If we close the week back above, let's just say 1877, 1880, somewhere in that neighborhood, wherever my cursor is, somewhere around here. But we close back above here, that's going to create a false breakdown, which is going to erupt some dollar Mexican peso buying, which in turn is going to also signal that the S&P and the rest of the stock markets are probably going to come down. One of the other things I want to point out before I turn it over to Steve is if you look at yesterday's daily candle in the S&P and not just the S&P, but look at like the DAX and look at everything else. We had a gravestone doji here in the S&P. Look at the DAX. This is an ugly candle. Ugly, ugly, ugly. Hit new trend highs, 127% extension, pin bar going the other direction. Yeah, that's natural that we're going to go lower. Now, if you look at the DAX even a little closer here, below, like, let's just call it 13,330, below there, that's when things get a little messier for the DAX, because now you have a false breakout, new highs, reversal below breakout point. Things might get a little bit dicey for the German index. So those are just things that I'm looking at going into today's ECB meeting. The market's been very quiet in European trade. It's actually been quiet all week. All week it seems like it. Quiet for Europe. We're seeing more movement in Asia and North America, which is odd. I don't expect that trend to continue, but it is worth noting. Anyway, guys, remember, ForexAnalytix, pricing that you see here once, twice a year. Next time you're going to see these prices is going to be in September. So, when end of August, early September, when we have the new trading year. It's after summer and we're after the summer doldrums, and then we do an offer right around then. If you have been on the fence about joining ForexAnalytix, this is the time to do it. And also, if you're like, well, maybe my trading can help, pay for my subscription, try joining the reimbursement program. Talk to the guys at Forest Park FX. They are a webinar sponsor. You can contact them on Skype or email. Contact them directly, and they can try to see if they can get you in the reimbursement program. If you're in North America, at least you could get like a cashback rebate. That would be awesome. All right, guys and gals, I'm going to pass it over to Steve and Stelios. Good morning, gentlemen.
Good morning, Blake.
Morning, guys.
Morning.
Hey. And we have jobless claims, but more importantly, we have, the ECB press conference coming up. So hope this market gets injected with a little bit of volatility going into today.
Yeah, that's the hope.
Yeah, we all got our fingers and toes crossed over here.
Yeah. Okay.
Okay, and Blake, don't forget to have 6 doses of Coronas with limes.
I'm probably gonna get the coronavirus on Friday evening. Here in the Southwest, I live in just north of the Mexican border. I like Coronas. What can I say? That's like a staple.
They're good. Yeah, I know.
You guys have a great one. Good luck today, and I'll see you guys for the midday market update 4 hours from now. Remember, I'll be updating you on what's happened throughout the course of the day and what to look into for Asia. That is a free webinar. I'll see you there. See you guys.
Thank you, Blake.
Thanks,
Thank you very much. So Blake talked about a few of the main things that are grabbing the headlines. The ECB was very unfortunately was a non-event so far. We do have the press conference starting in a few seconds, but the kept rates unchanged, and they've reiterated pretty much the same things that they've been saying for a while now. Now what the interesting thing was not that the ECB, was at the Bank of Canada, who also kept rates unchanged. This was yesterday, late yesterday, at 1.75%. But
Initial jobless claims and non-events, Telio, as you see from the numbers.
Yes, you are right. So the Bank of Canada, they kept their rates unchanged, but they lowered their forecast for a growth by 0.1%, and they were more dovish than expected, a little bit more dovish. So they talk about that there is uncertainty about household spending, about the global situation. They were a little bit more dovish, and hence the Canadian dollar is losing a little bit of ground, not a lot, but it's a little bit, and it's
Yeah, I was talking yesterday about the USD CAD being trapped in a ridiculously small range of like 70 pips for like 9 days, and we finally got out of it. Specifically yesterday, I mentioned that I would favor the next move being to the upside because of this triangle here. And we got that. So finally we get out of this monotony of doing nothing for so many days. Go on, Celio.
Yeah. So the CAD is broken. USD CAD is broken higher. Let's see how that continues. In terms of data, we did have Australian employment better than expected, and not by a huge amount, but still, good number. Unemployment rates ticked down.
And that actually, from a technical perspective, that actually saved the Aussie from breaking below this confluence of supports, which would also trigger a head and shoulders formation. So, so far the bulls are holding here.
Yes.
Hey guys, you know that Prince? Do you know the rock star passed away, Prince?
Yeah.
Ever heard of him? All right. Anyway,
I saw him live in 2008. Go on.
Wow, you saw a good show.
Purple Rain.
Yeah, Purple Rain. All right. Anyway, he wrote a song for central bankers when QE ends up just pushing on a string. Do you know the title of the song?
Is it When Doves Cry?
You got it. Bing, 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 bing. When doves cry.
So when they're doing QE and all that, it's Let's Go Crazy, and then when it's over, it's When Doves Cry.
Yeah, he must have traded FX.
Most likely.
Yeah. All right. Anyway.
Or anything else actually in the financial markets.
I'm looking forward to When Doves Cry.
Yeah. Okay. So Lagarde is starting. The other thing to note is that we did have Norges Bank as well, interest rate decision unchanged at 1.5%, and they gave us nothing either. So it's been very barren today, I'm afraid, in terms of stuff to work with. Yeah, I mean, that was it. Obviously the big question mark right now is about the coronavirus. How much is this going to affect markets, etc.? At the moment, markets are just treating it like SARS, years ago, or equivalent viruses. They're probably, they're thinking this is going to go away relatively quickly. And
we had a 10% pullback, I believe, during the SARS epidemic.
Did we? Okay.
Yeah.
Okay.
Just saying,
the pullbacks we're getting now are 0.1%, 0.2%.
I know, 0.00.
Yeah, anything above 0.5% is considered like a lifetime buying opportunity.
Yeah, because the PPT is in
there. Okay, so that's it. I'm going to keep an eye on Lagarde to see if anything big comes out. And back to you, Steve.
Okay, thanks. Thank you, Stelio. Go ahead and interrupt me at any given point, if she gives us, something, worth mentioning, or something that the markets might actually consider to be noteworthy. Also, if I'm looking at something else and the euro is moving, also, interrupt me to let me know. Sure. Thanks. So, since we started from that, since one of your comments was about the Aussie, just a reminder here, both the Aussie and the Kiwi looking even better. I mean, this move lower in the Kiwi was, clearly corrective. I mean, it has all the corrective characteristics somebody would expect. And as long as we remain above this broken trend line resistance, why not another push higher? The Aussie almost actually broke down. As I said, this 68.50 area was super critical. So far we're holding. Yesterday's actually jump higher from the Aussie, also kept the Aussie Kiwi somewhat afloat, so we might see another push higher in the Aussie Kiwi as well. I mean, it's still holding within this large ascending channel. Now, if we want to have a look at what is happening also with the Aussie against the yen, that is consolidating because despite this jump higher in the Aussie, the USD yen, as Blake was mentioning and Dale were mentioning earlier, has been so far getting rejected from this long-term trend line resistance. And if you remember, I kept warning about it, that we might break higher, but it makes no sense from a risk-reward perspective to be long against a multi-year resistance. So this might be like a small pullback, or it might prove to be something larger than that. One thing is for sure, when we were testing like for 4 consecutive days this trend line resistance, the only place you could position yourself with a very good risk reward was to the short side. Now, as long as the USD yen holds below that area, obviously you should be somewhat more skeptical with positioning yourself in any of the yen pairs, because obviously if this turn lower proves to be something bigger than just a short-term rejection, we might see a lot of movement taking place there, and especially considering the fact that we are extremely oversold on all indices, and at any given point a decent corrective move lower would make sense. That could actually produce even a bigger move lower in the USD yen. Now, having to do with indices, I'll be very brief here because I don't have much to say. To begin with, Blake showed the potential head and shoulders formation here in the S&P. I'm going to be much more superficial in this analysis. This can end up being an ascending wedge we've broken from, but the only way we can prove that something is up is at least producing a lower low. So, at least a move below 33.06 and some acceleration to the downside is going to be required for me to feel more optimistic about it. One extra reason is because the Nasdaq has barely, picked its head below this equivalent ascending wedge. So we still see a lot of RSI divergences, but this has been ongoing for some time. We still see extreme sentiment. We still see the VIX diverging, right? I mean, quite clearly diverging on all time frames as well. But all of that is not enough to to act as a timing indicator, right? So you want to see more action here. At the very least, we need to see 33.06 being taken out, and I want to see some pickup in momentum to the downside. I'm still short, by the way, to this one, but that doesn't mean that I'm proposing that as a position to the faint-hearted. So each one has their own risk tolerance and point of view in the market. So go ahead and do what you wish with that. Now,
Steve, just a quick note, nothing major, but just a quick note on what Lagarde is saying. She said again, they're ready to adjust all policy instruments as needed. So that's that you can't say that this is a hawkish comment, but she does say signs that growth is stabilizing. So you get, as usual, a bit of both sides just to keep you happy.
Yeah, indeed. Talking from both sides of the mouth.
Yeah, and she did say also that the risks are still tilted to the downside, but it's less pronounced now. So that's that's a little bit more.
Yeah, and as I see here on the 4-hour chart, Euro USD spiked high, but it has now given back like half of that spike within like 1 minute. So it's more or less illiquidity and algos doing what they're doing, by reading every word, and less, actual, worth mentioning price action. And, I doubted that Lagarde is going to deviate from the norm and give us something tangible. She will keep, trying to, at the same time, be somewhat optimistic, but also, not let the markets believe that, the dovish tone is going to change anytime soon, because, that could lead to a sell-off. Euro USD ripped, says Sandrine. Yeah, depends on which time frame you're looking at. The time frames I'm looking at, this isn't even a blip. Joe says in Aussie USD, if you draw a trend line from the low to yesterday's doji candle on the daily, that's another trend line that held major confluence of support. Let me see, Joe.
The rip's a drip now.
I'm assuming you mean this one, right? Yeah, I think I have this probably on the 4-hour chart. Yeah, I see what you're talking about. So this trend line you're talking about. Yeah, so another, yeah, this one, right? Yeah. So another confluence of supports there. We had that trend line support as well. Yeah, that's a good comment. So it wasn't like a triple confluence; it was like a quadruple confluence of supports. Regardless, it worked. So as long as we stay above it, I think that from a risk-reward perspective, it makes sense to try to be on the long side. Now, there is no doubt that the Aussie remains heavy. So, no doubting that. But, you still have the ability to be long by risking very little. I mean, even by taking yesterday's low, that's, let's say, at 68.20, and, we're currently trading at like 68.70. So we're talking about a 50 pip stop loss to look for a move towards like 69.40 again at the very least. So, it's a one-to-one risk-reward ratio initially, a little bit better, and then if we actually continue higher, it's it makes 100% sense. Now, euro should push to 1060, so 106. You mean these? So to a lower low, you mean to new lows? Yeah, might be the case, but as we've said, 11080 is key support, and so far the euro has been holding this 11080. So above 11080, there's no reason for somebody to be aggressively bearish. Below 11080, yes, I agree with. We also trigger this head and shoulders formation. I talked about it some days ago. In which case, yeah, we should see lower prices. Silver had in day from 27th of September. First of all, silver suffered today one of the rather frequent, I would say, flash crashes lower, as you can see here. I mean, we dumped to the 50 daily moving average, and we've since recovered. Actually, we've very fast recovered like most of the losses. So, nothing really much has changed here in silver. I still see likely a bullish consolidation here. Same deal, even better actually with gold. Gold didn't have this flash crash happening to it today. So even if we see a lower low within this formation, I would still be looking for higher prices. We might directly go to a breakout actually from here, because this might not be like a flag. It might be a triangle, right? So who knows? I mean, with corrections, you can never be sure in advance which form they're going to decide to take. Now, palladium keeps being very volatile. Yesterday, we, in essence, almost erased the bearish key reversal we had the day before yesterday. And so far today, we are again, for the 5th consecutive day, getting rejected from that 261.8% extension. So, not for the faint-hearted, this price action in palladium. I'm still short, by the way. My cost average is still at 24.25, so I'm roughly at the market as we speak.
Gold silver ratio?
Gold silver ratio, since you mentioned it, is picked its head above this likely corrective formation today with the flash crash that silver had, but it's now trading below it once again. So
that was
from a risk reward perspective, not a bad short here in the gold silver ratio. Not bad at all, actually. No problem. Now, crude, I forgot to mention crude yesterday because crude was one of my highest convictions. I spoke about it last week for sure when I said that, this consolidation at that horizontal support area, in my opinion, was clearly corrective. The fact that we retested the broken channels trend line support as resistance, and then we got rejected. Was, you know, the last indication I needed. This was a nice little pennant. We broke below it as expected in that case. Next area of support is roughly at 54.50. So silver remains under pressure, and natural gas, we have some people here that frequently ask about natural gas. Natural gas has also been breaking lower. It has actually reached the 127% extension. And give me a second to check this out. Yeah, after you know, giving us a perfect rebound, right? Because as you see here, the first leg higher and this rebound was exactly equal to the second leg higher. So this was a nice corrective rebound. You know, we pushed to new lows. Keep in mind that we have the 2016 lows not being that far away anymore. I mean, we have some distance at 160. Might be a good buying opportunity, because I remind you that, you know, actual tangible commodities, you know, they don't produce price action that is like, you know, normal distributed, right? They tend to have like big tails to the right hand side, because, you know, their cost cannot go down to zero, because they have production costs, they have like transportation costs, you name it. So I think that natural gas might be, you know, might be giving us a nice buying opportunity in the near future. But you know, so far, and as long as it's holding this descending channel, I think that, you know, we need to remain more patient. We might see more downside. Would be great to retest that 161, 162 previous support area. Would be even better actually if we can take it out and then reverse. You know, I would really like that type of price action here. Let me go through some of your questions. Platinum already covered. CAD yen might be a better short than USD yen. Okay, so CAD yen. CAD yen, I was actually looking at it closely both yesterday when CAD started moving and today, earlier on the day. So there is CAD yen, and the reason I was closely monitoring it is because we were approaching, it's not exactly a confluence because they didn't fall exactly on top of each other, but they were very close to each other. We had the 127% extension of this move lower, and most importantly, the 61.8% extension, sorry, fib of, you know, that high to this low, you know, just like 17 pips above that. And we got rejected from there. We've now turned lower, and we're getting quite close to this channels trend line support, also confluencing with the 50 daily moving average. So CAD yen is definitely going to be looking good as a shorting opportunity if we take out this trend line, because at the same time we will also be registering a lower low. You can see that these lows over there currently confluence with where the trend line support passes from. So I'm with you on this camp. I don't know which of the two is going to suffer more. It is likely that the CAD yen can suffer more. We've had, you know, a big series of bad Canadian data coming through since a month ago. I mean, almost every Canadian data that has gone through my eyes, which is most of them, if not all, have been bad, or some of them abysmal. And the CAD wasn't really moving. So if the CAD starts actually moving with the data we got last month, you know, during the last month, and the USD yen stays below that, you know, long-term trend line, yeah, the CAD yen can actually, you know, move quite a lot lower. So, you know, you like it to the downside, below 83, I think is, you know, is a good place to start selling it. Okay. So yeah, thank you for reminding me. Probably I won't remember mentioning CAD yen. Let's see, those USD, yeah, we did cover that. Please, can you look at Bitcoin? Yeah, sure. We can have a look both at Bitcoin and Ethereum. Ben says, Dale, we are in the 100-year pandemic cycle, 1820 to 1823, yellow fever, 1918 to 1920, the Spanish flu, perhaps 2020 until question mark coronavirus. Yeah, you know, I mean, might be just a coincidence. So, you know, I don't think there is some kind of seasonality, 100-year seasonality cycle with pandemics, but, you know, who knows? I mean, but I'm not going to trade based on that. That's the only certain thing. If the market wants to take that into account, it's going to show up in price action, and it's going to form the proper technical formations. And, you know, if I see those formations, I won't really care that much if it's about a coronavirus or whatever else. I will be more than happy to trade them. Now, yeah, we said Bitcoin and Ethereum. I forgot about it. So Bitcoin and Ethereum, quite a nice move lower, but I can't really ignore this breakout we've had here. Now, there is a counter argument here. If we clone this trend line support, you can roughly say that this could also be a channel. And we got rejected from the channel. Now, it's not that beautiful, but, you know, I still, you know, want to mention it. So, you can say that that's also confluencing, as you see, with the 38.2 from this move lower. So nice rejection from a triple confluence of resistances, 200 daily moving average there. So, you know, you like Bitcoin to the downside against 9,300. You have a very good argument to be looking lower. Don't forget that we didn't actually produce a higher high, right? Not a lower low so far as well. So somebody can say that we remain in a downtrend, and, you know, that's 100% valid. And this breakout there was not significant because we haven't broken out from the channel, in which case, you know, you can be looking for lower prices. So, you know, you can look at it like that. Now, personally, you know, from a fundamental perspective, I'm not really bullish cryptocurrencies. I still am absolutely uncertain that they have any type of intrinsic value. Most likely they don't. I would rather, you know, own gold than any crypto. That doesn't mean that they can't move higher. So, you know, I'm paying attention to the technicals, and I want to see this move lower, how and where it's going to stop to determine if I want to pay more attention to that broken trend line, or to the fact that, you know, this channel is rejecting so far. Ethereum, you know, above that, descending wedge as well, finding resistance at confluence of resistances, another type of confluence of resistances, close to 180. So same deal here. I mean, you know, you can actually look this market both ways. I mean, you can actually say very correctly that Ethereum traded at some point at 1.4K, and we're currently trading almost at 1/10 of that. I mean, what other indication do you want to have to be very, very skeptical about an instrument, right? So it has been cut in, you know, in what? We've lost like 80-90% of its, you know, highest value. Now, on the other hand, if you want to be looking for a bigger rebound, that's the support I would be looking for. So, you know, if you find support there, you can actually attempt to buy it and, you know, look for higher prices. Now, if you're really bearish about it, I think against these highs, since it was a confluence of resistances, you still have a decent risk-reward ratio to be short. So, you know, it can go either way. I mean, if you're looking at the long-term picture, it makes sense to be bearish. But if you're looking like for a nice risk-reward opportunity, for an asymmetric, like, you know, return on your investment, you know, perhaps we can get like a bigger rebound from here.
Flip the bull bear coin.
or the dice, you know, or the 8-ball, right?
Oh yeah,
the magic 8-ball.
Yeah, the magic 8-ball. I'd be caution is warranted. Is that one of the answers in there?
Yeah, as I said,
he still loves you.
I think we need to see the type of the move we're going to get lower here to be able to have more confidence in what's happening, right? In general, as you know, I'm very, very skeptical with cryptos. Very, very skeptical.
Oh,
I
I
mean,
never noticed.
I wouldn't be surprised if in a few years nobody remember they existed. Having to do as an asset class, whatever. I don't even want to call them an asset class. They're not an asset. It's whatever. It's like electronic fiat currency. I would be all for a crypto backed by real gold. That
They're
would make
working on
sense.
that.
That will make sense. Actually, that will
Demzella
make sense.
Hayes, check her out. I've interviewed her a few times.
Yeah,
I'm
that
going
will
to get
make
her
sense.
back on. Yeah,
That will make sense because then you have all the benefits of the technology, right?
Yeah.
But also the backing of what has been for humanity for roughly 5,000 years, real money, and something that we know that over the centuries and over the eons has held its actual value against fiat currencies and whatever monetary lunacy we invent as humanity to to give us the ability to be financially and fiscally imprudent for as long as we can.
Do you know where that desire and the value of gold started? It's when extraterrestrials came down here.
Oh my
And
God.
they mated with primates, and they developed a human race to be slaves to mine gold for them. The ancient astronauts.
Oh, okay. Let me give me a second. Let me go to the kitchen and bring some tinfoil hats.
You don't believe that theory, huh? A lot of people do. Anyone out there?
I've heard about that theory, but really, I find no reason in spending any time in analyzing theories that really are unprovable. I mean, anything is likely, but what is going to change in my life by believing it or not believing it, by following it or not, right? So whatever.
Yeah. Anyway, it's almost interview time anyway, and
who do we have today, by the way?
Someone who's out of this world, Amelia Bordeaux.
Oh, okay, nice.
You've met her.
Oh yeah, I have, and yeah. I even saw her tweet the other day. She's like running all the marathons. I mean, good for her.
Oh, she just disappeared.
She did?
I guess I.
You scared her.
Is. No, there she is. Okay. All right. She's a marathon runner.
She is. She is.
Wow. Yeah. Okay. Well, we're going to do about a 20-30 minute sprint. If you want to start, she's here. Or
yeah, there is a question. Just very briefly, there is a question if there is any possibility of actually bottom picking the Euro Swiss. This can prove like a terminal move lower in this descending wedge, but I would be very skeptical, right? Very skeptical. So can it rebound at some point? Yeah, sure it can. I mean, we know that the S&P, will try to support it. We've already moved far away from the highs that we saw in 2018 when we back tested the broken floor. And, I'm pretty sure that, the tolerance for Swiss strength from the S&P is not that much. So being short, has a big danger here that you might wake up one day and see it like, higher because of an intervention or whatever. But on the other hand, since the high, we've seen only sequences of moves lower and corrective moves, either horizontal or rebounds that are clearly corrective. So I think it's quite tricky. So it is what it is. I think that for the time being, and consider that we're still, theoretically speaking, in risk-on phase, right? I mean, indices are hitting new highs. So I don't know what's going to happen here if we see risk sour and turning decisively lower. It's a tough call. It's a tough call. It was an easy call at 120, to say, okay, this is where I want to be short. But now we've moved quite far, so it's a tough call because you're going to be fighting the S&P. Thanks, Coach. Enjoy the interview with Amelia.
Okay, thank you, Steve. Okay, Amelia. Welcome back, Amelia.
Hi, can you hear me?
Yeah, how are you?
Super, I'm well. How are you guys?
You're out of this world.
Thanks.
Yeah, you like that, huh?
I do. It's exciting. I
All
did
right.
run the marathon in Houston, so.
Amelia,
Wow.
have you ever run the original marathon in Greece?
No, I would love to though. I actually know people who have, and that would be amazing.
It's every November, so make plans. Come next November.
Yeah,
We'll be
I
happy to
should.
have you in Athens.
Yeah,
Yeah,
and
I
Steve,
would love to. What's the weather? Is it very hot in November in Athens? Or?
No. It's actually usually I would say around November can be anywhere between 10 degrees Celsius and 20 degrees Celsius. So anywhere.
and Amelia, Steve does a
So the
marathon
temperature
too.
is.
Oh, really?
Yeah, in his Mercedes.
No. I actually used to run quite a lot on a weekly basis.
Well, used to.
Until my back gave up on me.
Yeah.
Now
you run it in your Mercedes.
Yeah. So
You
unfortunately,
have to get a standing desk. It's like sitting is the new smoking.
Yeah. So unfortunately, I've now restricted myself in taking almost every single night like a very long walk outside. When things calm down. So I walk like 4 or 5 kilometers per night. That doesn't hurt my back, but unfortunately the vibration
Pounding,
from running, unfortunately, I can't handle it anymore for more than. I mean, if I do it a couple of times in a week, then I'm going to start feeling really lousy. I'm going to wake up and be like a piece of wood.
Yeah, I understand. Maybe incorporate some yoga there. Come on, this is like a fitness show now, right?
Yeah, okay. So, switch on your camera and show us some yoga because I have, no relevance with this game. I mean,
We're covering a lot of ground this morning. We got Prince songs, we got fitness.
Yeah, indeed.
Don't forget the extraterrestrial. So,
that's right.
Amelia, the big question is, and you share your screen by going to that green box.
Oh no.
There's a share button, yes, in the panel.
Uh-oh.
I'm going to try and get Steve to calm down a little bit. He's very excited about you being here today. All right, so it's a little green box, drop-down menu when you float your cursor over it.
Share.
Yeah, share.
And it's going to ask you which screen or application you want to share, and then you click again, and you're good to go.
Okay.
There you go.
All right, let me just get this back up, and then I have two things. I'm going to switch between a PowerPoint, but then don't worry, I'll show you live charts, but I just want to.
Okay. What good is anything, Amelia, until it's shared with another?
I didn't want to be too repetitive, but here's where you can find me. That's my website on top.
Okay, yeah.
Right at the start, you can sign up for free content in the pop-up box. And then I have a global macro event risk webinar. It's monthly. It was just last night. You can reach out to me if you want to see that one as an example. But it's marketcompassllc.com and go to the webinar tab. And there's a video explaining what it is. And you can subscribe at the bottom.
Okay, cool.
And this is where you can find me everywhere else on social media.
Okay.
I wanted to start can I start with just what's going on?
Yeah, sure. Yeah, I mean, take it away.
This is just the S&P 500 versus the VIX index. So the VIX is yellow and the S&P is the red and green line. Yep. And you see that, look at that move obviously up in the S&P, new high after new high. And you can see that V, where the VIX is lowering and the S&P is really rising, starting October 11th. And that was when U.S. President Trump announced the phase 1 China trade deal had been reached, and it wasn't signed until January 15th. And you can kind of see that vertical line all the way on the right. That's the day, January 15th, when it was signed. And you see even another up leg there in the S&P 500. So that's really set the tone. That October 11th date really set the tone of the risk on the risk seeking in markets. And I just put that horizontal purple line at 18, and that's the line in the VIX where once it's above 18, things are considered, kind of risk off. That's VIX spiking. So I just like to refer to this chart.
Do you make anything out of it with the parabolic move we had in indexes that the VIX didn't print 11 or 10?
Yeah, I think that just the VIX has been super, super low. And even, I'll get to this in a minute, even through the Iran strikes, it was pretty low. So, the market, that's showing to me that the market investors have some complacency. So, if this is going to go one way or another, you're going to have a risk off kind of shock or a risk off movement.
My point was that we didn't make new lows on VIX with the parabolic move in S&Ps.
It's just so low already. I think part of that reason, though, that you bring up, part of the reason we didn't, I think, is because Brexit was still out there, and we didn't really have a date for the signing until right a week before it happened. So people were like, it's going to get signed, the trade deal. And then we also have the U.S. kind of President Trump impeachment simmering in the background. So there are some definite risks out there.
Would you be buying it for insurance at the minimum?
Yeah, I would.
Okay.
I think the market's too complacent. As a hedge, I would actually buy it. I think, I think was it Paul Tudor Jones? I forget who said it this past week. I know he compared it now till 1999, but he was saying, I like to ride the market when it's running. And me too, me too. I think, this ride up in stocks, it's hard to fight a severe, it's hard to fight a big risk on move, and it's hard to fight a big risk off move. So if this is running, let it run. You can kind of, if you're nervous about it, which, you should be, but I'm not saying add to the position, but your existing equities positions can let them run. And, you can hedge with a long VIX position, try to hedge.
Okay.
And you can see here, this is just a dollar index. You can see that we're just trading in a lower range. It's just shifted lower. And that makes a lot of sense because we've had this big risk on move. And so the dollar being a safe haven currency can kind of, take a break. It's not weak, but it's shifted into a lower kind of trading range. I also
your big events were parity or lower in euro and sharply lower cable. And you talked about that if you're not there for those moves and you're at a bank desk, you're fired. So let me ask you, I talked about it in Twitter. Has your bearishness decreased on the currencies on euro and cable? Or do you still look for those types of watershed marks to be achieved?
It's the watershed marks I don't think are going to be achieved this year because it seems like we have, for the most part for Brexit, we've avoided temporarily at least a no deal exit from the European Union. But I'm always a seller of cable, basically. So anytime I don't like cable. Anytime it rallies, I want to sell cable because there's just so much risk coming up. I'll just show you this one chart here, and then we'll go to cable, just because I have it up. I just wanted to, we're just on the equity market rally here. This is the red and green. This is Tesla. And a parabolic move. And against Tesla, this purple line is dollar yen. And so it's kind of interesting how this parabolic move was ramping up here in Tesla. And this is dollar yen. Dollar's getting stronger for the most part against the yen because it's risk seeking. So that makes sense. And Tesla's like a proxy for that risk seeking in the market. And then these two vertical lines here in this oval, that's the Iranian strike. So that's the January 5th U.S. drone kills the military commander in Iran. And then this is a retaliatory strike on January 8th when Iran strikes an Iraqi military base with U.S. troops on it, okay? And so you see equities are pretty much held in over that time. This is Tesla, but dollar yen strengthened. So this is that risk-off move in currencies. You see the departure here. Yen basically strengthens and then recovers pretty quickly. This was only about a week, 5-day period here, this oval. And we see it coming back up. So I just think it's interesting that, you know, maybe investors and traders, when they look at like an oil price shock like this, over that time, we ramped up in oil price and then it came off quickly after January 8th again. It's interesting that some traders clearly turned when oil spiked and it was risk off and yen strengthened, they turned their attention to, you know, like an alternative energy car company. And I think this is kind of one of the first times we've really seen that, and just something to keep in mind going forward. If there's ever
Huge short squeeze. I mean, there were huge short positions in Tesla. I think they're in the graveyard now.
Yeah. Yeah, it's just been really.
And the yen, I don't know. I think this action that we had over 109.70 that looked like a breakout, we're underneath it now, Amelia. I think there's a chance with what's happening with yields that U.S. dollar yen is heading lower here.
Yeah, I think there's too much risk out there. I mean, you guys, this is dollar yen. I mean, you guys are talking about there's a coronavirus. There's, you just don't know where the external shocks exactly are going to come from. We have very bad news. We've had very bad news, especially the past 2 days on Boeing. Boeing being the largest.
Oh, yeah. It broke down.
That bad news for Boeing is not over yet. United Airlines came out yesterday and said, you know, we're not going to fly. They basically said we're not going to fly 737 MAXs all quote unquote summer, where the FAA was expected to approve them by June, the end of June. So they're just day after day of bad Boeing news. And what happens is bad Boeing news, Dow futures are lower, Dow opens lower, dollar yen falls. Like, this has been a pattern since the whole entire Boeing crisis commenced. So yeah, here you see dollar yen, and the blue lines, the blue horizontal lines are the support levels. So you got to be looking at, you know, just around 109, the figure 108.50, and then 108. So
nice look.
Yeah, anytime we get up to like that 110.50, and we haven't been up there, but for a while, but we were up there last in May. But you know, above 110, the figure, I'm a seller of dollar yen. Why? Because there's too much risk out there. There's the impeachment in the Senate going on for President Trump. We don't know who the Democratic candidate will be yet, to his challenger for the election. Brexit's like sort of resolved, but not really. And Boeing is still having immense difficulty, which will impact headlines.
Okay. What the dates that you have on the vertical dash lines, are they cycles?
No, those are just, I don't know, those are just auto added in. So.
Oh, okay.
But let me show you sterling, because we have Brexit coming up. We got to look at this, right?
Yeah.
You mentioned it. So here's sterling. You know, we have three interesting dates coming. So these will be exciting times in the market. So January 29th is Boeing's earnings report, pre-market open. So that's going to be, I got out of my Boeing position because I was like, I don't really want to deal with this that day. So, you know, you want to watch dollar yen intraday that day, clearly on January 29th when that earnings report. And you have time because, as I just mentioned, earnings comes before market open. You're going to look at the Dow Jones futures. You're going to look at how Dow Jones opens. You're going to be looking at dollar yen that day. The very next day, the 30th, pre-market open again, 7 a.m. is the Bank of England meeting. And this will be one of Mark's last meetings. So I'm sure.
What country is he going to next?
I think he's staying. I think he's staying in the UK. Andrew Bailey takes over March 16th at the Bank of England, and he is he's British. He's from the UK, and he's at the FCA, the regulator, right now. But he spent 30 years at the Bank of England before going to the regulator, so he's very well known, obviously.
Okay.
Maybe
Carney will come here.
I don't know.
You know, President Trump doesn't like Jerome. Go ahead.
I know.
Go ahead.
Bring him in. We'll see.
He's mean to him, Amelia.
He is mean to him. He is.
Yeah.
I think Jerome's been doing President Trump some favors, but President Trump, I mean, you know, just.
He can never do enough.
Yeah, you can never do enough. That's what I'm trying to say.
All right. What have you done for me lately?
Yeah. Exactly.
Anyway, so how do you approach this going into Brexit?
Well, the funny thing is that January 30th, pre-market open, is the Bank of England announcement. And the next day, January 31st, is Brexit. So you got the 29th, the 30th, and the 31st. You have this like 3-day period that's going to be very exciting what a way to end January. It's going to go out with a bang. It's very exciting. So January 30th, the Bank of England could cut rates. This is one of Mark Carney's last meetings. Maybe he wants to leave the UK in shape the way he wants it, saying, look, I did everything I could. They had weak holiday spending in the United Kingdom, and the market is just a little under 70% price for a 25 basis rate cut on January 30th. So let's see. It's going to be a surprise basically either way because it's not fully priced. It's going to move the currency. So we could have this thing where the Bank of England cuts rates on the 30th, and that would weigh a bit on the pound depending on how dovish the statement is. And so we would look back down to that 130, the figure there, that horizontal line, and possibly even, we could push it to 129, the figure. The following day is Brexit, the 31st. So not a lot is going to change in UK citizens' lives on that day because we avoided the hard exit. But, it's going to be a weird day because the market's waited for it kind of for like about 3 years. I'm not entirely sure what's going to happen that day, but I'm sure you want to watch the pound. We could see a bit of a relief rally. You could see a bit of a traders are like, finally, this has gotten done. And I don't think it'll be much of a rally. I don't think it's a rally you want to ride, but you may want to be cautious if there's a relief rally back up to say where we are now, or 132, the figure, maybe even 133. And that would be a definite sell area because a day after Brexit or 2 days after Brexit, you're going to start to see the negative headlines, which you've already started to see about fishing rights between the UK and the EU and all of the trade issues that are going on. And so that's going to continue until December 31st, 2020. And
what do you do with major red events? Central bank announcements, Brexit announcements. You use the word watch, and I would rather react to the reaction than be positioned into it. Is it okay to stand aside and do nothing?
Yeah, it is. It's a definite Bermuda Triangle here with the, I don't know, like a Bermuda 2 point, say. We have the Bank of England and the very next day Brexit, and that's going to be a tough one. If Bank of England doesn't cut, you could see a little bit of rally in the pound, like, okay, they didn't cut, pound supported. Then the next day you could see a little bit of a mini rally further, like, ooh, Brexit has actually got done. And then that would be, I wouldn't play that rally. If that occurs, I would not touch it. I would just wait until it's over, and then I would short the pound. And I would short pound at the top of the range. You see the range in the box there, like that's 133.50. If sterling breaks the range top side, I'm not going to chase it. I'm going to wait to short it. It's going to turn. So if you think it's getting away from you, or anyone thinks that, there's going to be so many negative headlines in the next couple weeks after the Brexit that I would just not worry about it. It's not going to get away. You're going to be able to short it, I think.
No FOMO.
Yeah, exactly.
Okay.
You want to look at Aussie?
Sure. Yeah, we were talking about that today.
Yeah. Aussie had a bad start to the year, obviously, with all the, the bushfires were so devastating. And bushfire season continues to go until March. So it's not over yet. And temperatures are actually very hot today in Australia. They're very warm, and they're expected to be warm for the next week. So people are actually pretty worried there still.
Is it more weather or China?
It's more
fires.
Weather.
It is a fire.
Yeah, it's more weather, but obviously, Australia is impacted by anything that happens in China, and so it's just kind of that certainly isn't helping the coronavirus outbreak. But we have a lot of productivity loss from the wildfires, house buildings destroyed, tourism's been impacted, agriculture, and this had followed on. The wildfires had followed on from a drought in Australia, so it's just been super tough. They're going to take an impact onto the Q1 GDP. We did have good employment last night. It's just a matter of consumer sentiment, if that kind of holds up or doesn't. And so the RBA, the Reserve Bank of Australia, may want to get out in front of this slowdown. We haven't heard from them in a while, since December, but their next meeting is February 4th. And so that's going to be a pretty interesting day in the market for Aussie, because, they could cut rates to kind of get out in front of this slowdown. In the back end, there will be rebuilding, you know, obviously, and that will help offset the slowdown. So, you know, you had the destruction, you're going to have rebuilding, but those kind of are one at a time. So you're going to obviously see the slowdown first in the Q1 GDP numbers. And it just depends on if there's any more wildfires between now and February 4th, what consumer sentiment does. And so you're just looking at, you know, down to like, say, 68, the figure there is a big level, is a big support in Aussie. If the RBA does cut rates, we'll definitely see Aussie lower. And it's been interesting because at the start, you know, we showed those charts of the big, obviously, run up in S&P 500, and Aussie being a high beta currency, it really hasn't enjoyed, you know, we did reach the high of 70 around Christmas time there, shortly after, before New Year's, 70.15. But considering how much the S&P 500 has run up in the US, Aussie really hasn't caught that momentum. And so
Such a bid, you're right.
Yeah, domestic factors. And so I like it lower. I think with what's going on there, it can't really rally too much.
You know, Amelia, I think the last time we talked, I'm not sure where Euro was trading, but we had that rally from the high 108 handle to a little over 112, and here we are at 10.5. It looks kind of negative to me that this may have just been some type of little ABC up to 112. And is there anything that's telling you what kind of levels to the downside will be important in Euro?
It's really been rangy. You know, it hasn't really done much. To their credit,
Right.
You know, Draghi, before he left, handed the reins over to Christine Lagarde. He implemented a new quantitative easing. He cut rates and he implemented quantitative easing. So that's going to help. It weighs on the currency, but it's going to help the economy going forward, where prior to that, when I had that very negative call a while ago, you know, the ECB was on hold and wasn't doing anything. I always think kind of the ECB has reacted a bit late to things.
Do you think it'll be different with Lagarde?
I'm not sure, because she's doing a review now of the inflation target. Mm-hmm. And so that's coming under a little bit of scrutiny. So we'll see what comes of that. I'm surprised she's taking that on so early in her tenure, and people are a little wary that
aggressive.
Yeah, it's a little aggressive. So people are like, yeah, what is she doing so soon?
Yeah. Okay.
You know, I just think we're stuck.
Not like Janet Yellen.
110 the figure is a big level, obviously, the bottom of that box. 110 the figure is a big level.
Okay.
Anytime we get sub 110, I think traders try to just push it lower.
Okay. Looks pretty heavy to me. So any outside markets, perhaps precious metals have had a big run, or anything on bonds? Do you have a view on yields that could affect currency movements?
I'm going to show you. I'm going to do another currency, though. I'm going to show you this. I'm going to show you Sweden. Weird. Something's going on in Sweden. Why can't I picture it?
Euro SEK?
Yeah. So, you know, the Riksbank has done a weird thing, and they pre-told us they were going to do a weird thing in December. They said they were going to hike their policy rate 25 basis points, which to every analyst made no sense. They literally came out before they did it and said they were going to do it in December. They told us. And this didn't make any sense. Sweden's rates were negative. They hiked them to 0. And the Riksbank was saying their economy is in a slowdown. So it didn't make sense. Their inflation is sub-target. So this made no sense that they were going to hike rates. And they said the reason they did it was just they were uncomfortable having negative rates and they wanted to get back. And so here you see Euro stocky and you see the high, and it got massively stronger against the Euro. This is October 18th. So that's like a few days after, that's like a week after the US-China trade phase 1 deal was signed, and US equities are rallying massively here. So stocky rallies massively against the Euro too, because it's a very high beta currency. Plus the central bank was going to hike in December. Now we've kind of consolidated, and you know, we've turned back up. Stocky's getting a little weaker post the rate hike.
So you think this is a central bank aberrational behavior, or could it be a precursor You don't
It's
think
a
it's a
precursor to
precursor?
danger. It's kind of like they didn't
Okay.
know what to do, and they were really uncomfortable with negative rates. So they just
Okay.
decided to hike, but there's no economic reason to hike. And most analysts in Sweden, like based at the Nordic banks or Norway,
Mhm.
based in the Scandinavian banks, who are, you know, familiar and live in the region, are saying like Sweden's going to go into recession this year, and so they're going to have to cut rates again. And so this was a mistake. And so,
Okay.
while this isn't a right now trade or immediate, this is you definitely want to watch Euro Stocky to run back higher. You know, we have a 1060 target, possibly even all the way back up to say 1080 over the next few months as, you know, the data weakens in Sweden, and hopefully the currency will reflect that against the euro.
Okay. So now would be a good time to go back over your contact information, unless there's something else you want to share with us today, Amelia.
No, so yeah, here it is. I put it up first because I always forget. But you can find me on Twitter at Amelia Bordeaux. I do a lot of video stories on Instagram stories, so it's just at Market Compass, and you can see intraday updates via video there. And I have Market Compass YouTube, which shows kind of my media interviews and me running marathons and stuff like that. But my Global Macro Event Risk webinar, that's a separate tab on my website, and it's a monthly webinar. We just held it last night. And it goes through very specifically event risk and tradable events, or how to hedge your portfolio over the next 3 weeks. It's held every 3 weeks. And then I email updates in between when something is changing or newsworthy. You know, it allows you to know which days, even if you're a technical trader and not macro based, it allows you to know which days in the market are going to be busier than others. Like I explained, it's January 29th,
Right.
30th, 31st. We're going to have a lot of volatility. So, you know, we look at equities in the US, we look at commodities, and we look at foreign exchange. So you can watch a video there and learn about it, and you can also subscribe there. And if you just go to my main homepage, marketcompassllc.com, you can just sign up for free for my free content also.
Well, thank you, Amelia. Amelia is
you.
one of the best central bank watchers I know, that ties it all together, puts the jigsaw puzzle together. So I hope you have a great 2020, Amelia.
Thank you.
That,
You too.
that pips rain down on you. Like,
You too.
like what it's like when I sing Purple Rain. So anyway, thank you so much, Amelia. Good hunting, and let's get back together in the spring.
Yes. Thanks, everyone. Take care.
Okay. Oh, one question. I want to wrap it with this from Alexandros Mertson. I'm going to embarrass him. Is Amelia married?
I am not married, but I have I'm in a long-term relationship.
Okay. So forget it, man.
Take
this
it.
is not FXmatch.com, Alexandros. You're banned from Phase. Anyway.
FXmatch.com.
All right.
Well, maybe you can start a new company like TraderMatch.com.
I have enough.
Business idea for you.
Enough on my plate right now, Amelia. So thank you so much for hanging out and sharing your views. Good luck at the end of the month.
Okay, take care. Bye.
All right, everyone. That's a wrap. We'll see everyone for Turnaround Friday. We'll wrap it up. TGIF. Don't just count your pips, count your blessings, everyone. And we'll be back here tomorrow to wrap the week up with you. Adios. Thanks again, Amelia.
Take care.